The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker. I'm Hong Bin Jung. Now, it looks like oil markets are seeing some volatility now. Oil raised another large increase with traders monitoring continued attacks between Iran and Israel over the weekend in a region that produces around a third of the world's crude. Now, Brent traded around as much as 0.3%, having earlier leaped more than 5%. Now, meanwhile, on this backdrop, earlier this month, oil had its best week of the year with West Texas Intermediate crude prices rising 6.2%, Brent rising about 5.9%. But some say this momentum won't last. Experts say prices could briefly drop into the $40 range. Now, at the same time, the global energy landscape is undergoing a significant transformation. After years of rapid growth driven by China, the spotlight is shifting towards India, which is now emerging as the fastest growing market for oil and gas demand. So to uncover all of this and talk more about it, joining me now is Lynn Ye, who is the Vice President of Commodities Markets of Oil at Rystad Energy. Lynn, welcome to the show.
Thank you.
Thank you so much for joining us. Lynn, it looks like oil markets are seeing some volatility today, especially. How are oil markets faring at the moment? What are some of the key drivers?
Yeah, thank you for the introduction. Feel happy to be on the show. Mm-hmm. Actually, oil market has been roiled since last Friday, and now it's at a major tipping point right now. So over the weekend, so many things happened, But the last Friday, it really took the market out of surprise because suddenly Israel started this attack at Iran, and then, retaliations, and then oil price spiked to $78 per barrel. And then, before it retreated again to 74 at the closing point. It's as large as a 12% of increase for the oil prices, which is very large jump in a single day.
Right.
Yeah, probably the biggest one since the Russian-Ukraine conflict. Yeah.
So would you say this positive run will continue? Will it last? Is it sustainable?
Yeah, that's a very good question. Actually, the market is very volatile right now. And it could go up, but in our view, we think it would very hardly reach $80 per barrel. And we think the rally could be short-lived. And I can support with a lot of our insights later. But basically, we think, based on the current progress of the event, it's likely negotiations is on the way.
Right.
Yeah.
Well, setting aside this current Israel and Iran conflict that has been moving oil markets, previously experts have said, oil prices could fall below $50 this year as a flood of new supply from OPEC and its allies comes into the market in the coming months. What are your views? Could prices fall below $50?
Yeah, actually, the question seems a little bit not relevant now because of the higher prices, but it's true because we have seen the oil price tumble a lot from the early April because of the Trump's tariffs. And then we have the OPEC Plus cuts unwind, and 3 times larger and for 3 consecutive months, which add a lot of bearish sentiments to the market. And a lot of discussions, like you said, whether it will go down to $50 per barrel. But it's not our view that oil price will tumble like this. We still think, from fundamentals view, oil price will be stay above $60 per barrel. Yeah, because we have a lot of data to support us to do this fundamental research to support our view, not just market sentiments or headlines or the geopolitical factors. But right now, the market is dominated by this whole Israel-Iran event, the conflict, and it's factored in as high as $10 per barrel of the risk premium.
Right. It could be a knee-jerk reaction to the current conflict, but what factors, especially since you did mention that you don't see it falling below $50, but you do see it going to perhaps staying above that $60 range. What factors could lead oil prices to slump to that range, though?
Yeah, actually, when the oil price tumbled from early April, it's really not driven by the fundamentals because we see this market right now as a decent demand picture. So it's really the bearish outlook on demand driven by the tariffs is impacting the market's perception of the current fundamentals. That is one factor. The other is OPEC Plus cost unwind. It's out of our expectation because previously OPEC Plus has done a very good job in managing price and market from the supply side. So a lot of people are wondering whether it's not the case anymore. But in our view, actually OPEC Plus is still monitoring the market and managing the market, but probably through a different strategy.
Right.
So we are kind of analyzing OPEC Plus strategy in a different way this year because we all know this year is not a normal year because of Trump.
Right. So what are the potential global economic implications, though, if oil prices stay at, say, the $40 to $50 range for an extended period?
Even though we don't think that will happen, but if it is the case, then of course it will encourage the demand because of the lower cost of the energy. And also it will hurt the marginal suppliers. As we know that probably U.S. shale is probably the marginal suppliers right now on the market. And their average break-even oil price is averaged at above $50 per barrel. So let's say if oil price is really that low, then U.S. will cut their production for sure. And we have already changed our forecast for U.S. production this year. We kind of lowered the number for 2025 by 200,000 barrels per day for because of the bearish oil price.
But how might OPEC Plus then adjust their production strategies in response to, say, potential falling prices? Could we expect coordinated production cuts from them as well?
Yeah, like I said, we think OPEC Plus is just manage the market in a different manner, in a different strategy. So we think they took a very calculated manner in terms of the time window to bring more barrels back. So if we look at the market from May to August, actually crude demand increases a lot during these months and even larger than the supply growth. And the fundamentals will support OPEC Plus to release more barrels to the market to meet the demand. And this is the perfect window for them. But after that, from September onwards, we think it will recalculate and reassess the need to further unwind their cuts.
Okay. Well, meanwhile, it looks like after more than a decade of dominance by China, the global oil and gas spotlight is shifting as well. Some say India is now at center stage. So, Lynn, could India be poised to overtake China as the biggest driver of global oil and gas demand growth over the next decade? I mean, what would it take for this to happen?
I kind of agree with this view because China has really slowed down, let's say. But a lot may have misunderstood the reasons that China slowed down. It's not mainly driven by the economic slowdown, actually. It's a lot of factors like the economic models transition from industry-driven to more consumption-driven, and also the energy transition, which impacts the fuels demand a lot in China. Like we have seen the faster EV penetration and also the LNG trucks to hurt diesel demand. These are happening, and gasoline and diesel demand has peaked. And actually the current overall oil demand for China is driven by petrochemical feedstock demand. So that seems like an end story for China because the oil demand is going to peak really soon in probably next year.
Okay.
That's our forecast. But at the same time, I think India actually gives the market some confidence in terms of continued oil demand growth, as we think India's economic growth will continue into the next decade in a fast pace, and also diesel demand will drive the total oil demand for India as well as petrochemical feedstock demand.
Okay, but how sustainable is India's oil demand growth given global energy transition pressures?
Actually, we don't think the energy transition pressure will be on India so fast. And also, given the large population and the demographic factors like it's not an aging population. So that we think India is still going to, in terms of oil demand and economy.
Okay. So how will India's growing oil demand influence OPEC's production strategies and global pricing as well?
I think India is a gift to OPEC Plus after China, and not just India actually. Other Asia and the emerging markets, their oil demand will continue to grow. And this will give OPEC Plus more leverage to meet the demand in coming decade, let's say.
All right. And are Indian refiners positioned well to handle the demand for lighter crude grades like those from Russia?
I think they have done a good job in this case, because I think they kind of have a balanced strategy in terms of processing the crude oil. I think they're designed to process medium sour, but in terms of the increasing euros from Russia, it's light sweet, then they can process more heavier grades like fuel oil even. Yeah, so after the blending, I think the average crude quality remains still very healthy for refineries in India.
Okay. Well, meanwhile, could China's slowing economy also have a larger ripple effect on global oil markets beyond just its own demand?
Actually, that's a very good question. So not just from the demand side, because even though China's oil demand has peaked, it's going to peak very soon, but we think the plateau stage would continue for a few years before it sharply decline. And also China's refineries has transitioned from the fuels to petrochemicals, which will make the refinery run still at a higher level. That means, not for gasoline and diesel, these two products exports from China will be capped by export quota. But for petrochemicals, actually, China has a larger space to develop, and petrochemicals have very long supply chain, and they can export PE, PP, or PX, or even the end consumption goods that will give China the chance to continue to develop its refining in the future. Yeah.
All right. Well, overall, Lynn, how do you see the balance of oil demand shifting among India, China, and the U.S. over the next decade?
I think if we want to put some keywords for these major economies, I think for U.S. the keyword will be stable. For China, it could be peaking, and for India, it's growth. Yeah, and I think, the emerging markets will continue to drive the growth, even though energy transition will be a key theme. And also for the developed countries, energy transition is facing some issues of slowdown, so probably will extend the oil age longer.
All right. Some great analysis from you there. Thank you so much, Lynn, for joining me today.
Thank you.
Thank you. That was Lynn Ye, who is the Vice President of Commodities Markets of Oil at Rystad Energy. This has been the Wealth Tracker with me, Hongbin Zhang.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.